Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. Eurozone recovery, that seems to be the running theme. High frequency indicators such as the PMI of services beat expectations are in the expansionary territory for the Eurozone. Apart from that, we didn't have any major data. This week is pretty light except for the Bank of England meeting. Morning, JK. Welcome back. Data light week. Do you think more recovery for the Euro is on cards? What do you think?
Yeah, good morning. To answer your question on euro recovery, I think it will be tempered because of rate cut expectations from ECB. And we have seen the inflation numbers from Eurozone well contained, closer to their target. So a June rate cut in Europe will probably widen the yield difference between US and Europe. That keeps the investors on the selling side of euro on any good rally. Yes, we had more confirmation on services activities further improving in April in Eurozone as per S&P Global's survey, adding to the recent raft of positive data. Apart from that, yesterday was an eventless day. We had a few officials from Fed, the Barkin and Mr. Williams, slightly toning down their hawkish stance after weak jobs and ISM data of last week. And interestingly, in the world's Wall Street Journal, which is most closely followed by analysts and investors, in its article post last week's event, mentioned that the economic slowdown is finally here, and the services sector cools, consumers pull back, and the rate cuts are back on the table. So that's a very interesting update from Wall Street Journal. Apart from economy, we had geopolitics simmer again yesterday, keeping bonds and gold somewhat bid. Even as Hamas was reportedly accepting Gaza's ceasefire terms, Israeli forces struck one of the regions in Gaza, southern region, and ordered residential leave the part of the city. So oil bounced from lows, gold recovered to its recent highs of 2325 overall, but the dollar awaits more clues on US economy and particularly inflation data next week for further moves. On the currency front, no big moves in the dollar, but dollar yen is still inching towards 155. Once again, no decisive trend of yen selling by investors, rather yen buying by investors. Just wondering when BOJ will spring their next surprise. In the broader picture, dollar stays in a wide range, and after falling at the top of the range, failing at the top of the range at 106.50 recently, a move back to the lower end is expected, with emerging themes of possible stagflation in the US, and some analysts even talking about a yield curve control adoption by US to cap borrowing costs for the government, whose deficit and debt pose a big threat to the stability. Not much on the economic calendar today again, except Reserve Bank of Australia meeting outcome at 10 a.m. India time, expectation that the central bank may revert to tightening bias. On the rupee, seen underperform near term as we head into the critical election results. Good demand is seen, notwithstanding softer dollar overall and even recovery in Asian currencies. Hedging activity in importers has actually been elevated recently, and that's probably driven by the upcoming event risk. That could also invite more covers in the coming days, supports the USD INR, and possibly even the outflow seen from FIS this month following a similar trend in April. So while short-term rupee movement should be contained at 83.30, 83.60, expect more volatility and wider ranges reacting to election outcomes next month, about which, of course, there are diverse expectations. Thank you.
Thank you, JK. And it seems ECB rate cut expectations are still on track. Inflation is well within target, and June rate cut expectations for the Eurozone is on track. Geopolitics continued to be a tussle between Israel and Hamas that kept gold on the bid. Currencies did not move much, but yen continues to be in the limelight as of now, post the big intervention by the BOJ last week. And of course, very interestingly, what JK mentioned is that there are rumors of possibly yield curve control being adopted by the US to contain the borrowing cost. So we'll see how that narrative plays out. And for rupee, we continue to underperform amidst the ongoing election. So the event risk is somewhat driving the pair. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.